Hello, everyone. Thank you for joining Joint Custody. My name is Ben Duve. I'm the Global Head of Partnerships of GK8 by Galaxy. And with me today is Alex, an old friend from the German ecosystem. Thank you for joining, Alex. And maybe you do your introduction yourself.
Thank you very much, Ben. Fantastic to be with you today. God, I'm an old guy, so I can probably talk lengthily about my background. But let's say short term, I never wanted to work in the finance industry. Ultimately, ended up being at Deutsche Börse for 15 years. Went through all the various areas: cash, derivatives, clearing, IT, and sales. Quit my job with an idea, startup idea, and then unfortunately that was too early. Maybe we come to that point later. And then joined Börse Stuttgart, became the CEO also from Euwax, did some stuff there, also introduced crypto trading, and then a short interlude with BitMEX in Hong Kong and Singapore before I ended up now running AllUnity for DWS Galaxy and Flow Traders.
Sounds like an interesting story. So the first question I would ask is, at what point did you get into digital? What got you hooked on that very interesting path?
Now, yeah, I'm a gamer. I'm a geek gamer. I love gaming. So not gambling, but gaming. So tabletop role-playing games, computer games, tabletop miniature games, what have you. And one of my absolute favorite game, and I was playing there a lot, really. I mean, a lot every day, a couple of hours, mostly through the night. That got busted because of wrong monetization, and that was like 2012, 13. And so I thought, okay, why did the game bust? Okay, wrong monetization, why monetization? And then I thought, okay, I'm a heavy gamer there. Why didn't the game producer reach out to me or to all the heavy gamers and say, hey, this guy busted, but another one comes up, and so maybe you want to join that one. So retain high profile players. And then it turned out they didn't have any information about me. And then so I started to dig it into the topic and said, okay, maybe we create a marketplace for trading of in-game items and profiles and accounts, but a legitimate one, not a black market, but a legitimate one. But then you stumble about the topic of preventing double spending. And so November 13, I had this idea of creating that marketplace, and I directly stumbled about these first little blooms of tokenization out there as an answer to the double spending effect. And so November 13, I read the white paper from Satoshi Nakamoto, and that opened up the world. And then I tried to create this first marketplace of tokenized in-game items, which was too early. But coming from the classical, traditional financial market world, where a lot of security mechanisms are institutionalized because you have not the possibility to prevent the double spending, and then you have the solution to that one. That was it, down the rabbit hole.
That sounds super interesting. I mean, that's a proper path as well, right? I mean, you went from gaming. How did you end up in Hong Kong, Singapore? I mean, that's a question I think from coming from very traditional players, being a gamer, and then introducing digital, as I understand already before your BitMEX journey. How did you end up in Hong Kong, Singapore? I mean, that's a very big step, isn't it?
It's a somewhat a little long stretch. So in my time at Deutsche Börse, I said I was running through spot markets, derivatives markets, clearing markets. I was onboarding exchanges and banking infrastructure onto the promises or spin-off parts of clearing houses, and did a lot of infrastructure play on the financial market side. And when I had this idea, I thought, okay, what is actually institutionalized when you think about classical financial markets? Then you directly come to full post-trade side. You also realize, thinking about it, if you really have the possibility to tokenize, yeah, and fragmentation and fractalization is directly, let's say, linked to that one. And I mean, the original white paper is about cross-border payments. Then you put this together and compare it to the classical financial world. The classical financial world is not a fungible global market. It's local regional markets regulated regionally that are connected through monopoly structures, mostly on the post-trade side. But if that is not necessary anymore, you can create a truly fungible global market, fragmented, that everybody can invest. Yeah, you don't have to have 100,000 profile. You don't have to have so much thousand. You can invest with $1 in Australia the same way you can invest in US or in Europe or wherever in the world. But back in the time, that was too early. I mean, I still remember when that was February 14. I was at Menlo Park, Facebook, because I was pitching my gaming idea. And while we had the discussion, I was just getting out of Deutsche Börse. I said, okay, why shouldn't we set up a Facebook coin? Uh, Believe it or not. So we said, okay, let's take Facebook, let's create a Facebook coin and use Clearstream as a global custodian. Guess what? Back in the time, nobody really wanted it and really got it. So we dropped it. But that
So
was
you're
really
the Libra inventor. You
Nah,
just
but I wouldn't go
basically.
that far. I wouldn't go that far. But it was really, I mean, when you really dig into that topic, you directly come to the point. What do you need? You need an ecosystem and you need the custody piece to it. Yeah.
Yes.
And back in the time still is Clearstream one of the largest global custodians back in the time, and maybe still is Facebook one of the largest, let's say, customer groups that you can have. Um, but coming to that, so 13, 14, creating what today we would call Animoca brands, you can imagine was too early. Yeah, changing monetization in EA's FIFA just because you think tokenization is a nice thing is maybe a little bit of too much of a stretch for EA. So that failed. Um, but back in the time, then I had a lot of connections to all the regional exchanges because they were back in the time of my Deutsche Börse time, they were all customers of me. And so I got approached by Börse Stuttgart to join them as a CTO and then CEO, and then also became CEO of the public listed broker, which is interesting because naturally a lot of tokenized assets are offered from the broker side, not from the exchange side. So having an exchange and a broker under one umbrella is extremely powerful. And so back in the time, we firstly restructured the classical exchange, but also we came up with a Bison offering. So the first regulated mobile trading for crypto. We constructed the first regulated MTF in Germany for crypto trading, and my legal team in Stuttgart back in the time was very supportive in creating the crypto custody law that we have in Germany. So I think we were at the right point in time. That was 17, 18 when we did all the stuff. Yeah, and it was mainly getting this new asset class into a wider mass acceptable audience in the preparation for the big picture, and the big picture is tokenization of whatever means it is. And when we announced we go into that space 17, 18, we had a lot of conversations with big European corporates, with DAX corporates, but also with tech companies, with logistics companies. But back in the time, tokenization was not possible because the regulatory framework was not there. What is a digital good? Yeah, can you buy a digital good if you don't know that the other one selling it has the property? And so a lot of laws they trade on to the physical good. But if the good is not physical, how can you actually have ownership and these discussions? So all these discussions more or less died. All these projects that were hyped in 17, 18, they more or less died. We were able to launch very successfully Bison, and I think it's still extremely successful for Börse Stuttgart and was a foundation for their digital arm that they're building out now. But I always wanted to create this bridge infrastructure between the tokenized world, let's call it that way. I don't want to say new and old. It's like the tokenized world and the classical world. And you need a regulated infrastructure, depending on which business you want to get into. It cannot be in some fringe jurisdiction running by you and me in a garage. I mean, that's you can do a big business on that one. Don't get me wrong, yeah. But if you want to have global TradFi accepting your infrastructure, you have to have a different setup. So I tried it in Stuttgart, achieved a lot, but not everything. But I was coming from the regulated world into the crypto world. And so when Arthur Hayes had a conversation with me, that was summer, when was that? Summer 20. Yeah, he said, "Hey, Alex, you did this from the regulated world into the crypto world. Can you do it from the crypto world into the
Yeah.
regulated
The
world?"
logical one, right?
Exactly. It's just the logical next step. Yeah.
Yeah.
And I said, "Oh, that's super interesting." And so we started the conversation for me to join BitMEX, but that was in the time of the pandemic. Yeah. And so
Uh,
moving my family in the pandemic to Hong Kong was, let's say, convincing challenge, but we loved it. It was fantastic. It was
Great
just
place. I've just been. It's an amazing city. Second time only. Amazing.
it is absolutely. We fell in love, and yeah, in a sense, we're desperate to go back. Um, And honestly, during the pandemic, yes, you had to run through 3 weeks hotel quarantine, but afterwards, more or less everything was open. Free, no tourists, open beaches. It was a fantastic time. Okay, ultimately, COVID hit it, and then it became very, very terrible. But I'd say that the time we've been there, and then Singapore was fantastic. Yeah, and I try to bring, let's say, crypto native infrastructure then to the regulated world. Achieved some, not everything that I wanted to achieve, maybe also with not that happy of an end. But the fundamental idea was always to create this infrastructure, which we ultimately wanted to do with acquiring Funderheit, a regulated German bank,
Yes, I
in
recall that one. Yes.
February 22. Because back in the time, Silvergate got busted, Signature Bank, let's say, got under. Yeah, and so setting something up in Germany as a bridge banking infrastructure, not a bank, a banking infrastructure is super critical.
Yes.
And so that was the idea. As I said, not so nice of an ending, so I had to let that go. And then 23, I tried it with external financing to build this bridge infrastructure. But 23 was a terrible year for financing. Yeah, it was
Yes.
really, really bad. But three potential shareholders in the discussion were DWS, Galaxy, and Flow Traders. Part of the discussion was always starting point is creating a stablecoin. And here we are. They said, start with that first, and then we see how it further goes on.
And now we have AllUnity, right? Which some people describe as a euro stablecoin, but I think that's not the full picture. So can you dive a little bit into it? What is AllUnity really, right? And then maybe also give a little bit of an insight. Who are your target clients? What are the use cases you target? Because I think there's so many discussions, and I think you guys are so much in front of a lot of the discussions in the industry. Maybe that's also interesting for people to understand where a stablecoin could play a role and what it is specifically you guys do at AllUnity.
Yeah, so absolutely. The first thing, which is super important, the stablecoin under MiCA, so the markets in crypto asset regulation in Europe, is cash. It is not Bitcoin. It is not some weird coin. It's not some shit coin. It is cash. It is the tokenized version of e-money. That's super important. And all the optimized payment mechanisms that we're currently discussing in the European Union are ending at the European borders. That's a fundamental thing. Now, AllUnity was set up by Galaxy, Flow Traders, and DWS, bringing together a fundamental piece that's important to get a stablecoin off the ground is trust. So you need to be in a tier one jurisdiction. You need to have a backing which creates trust. You need to have capabilities. We maybe later come to the capabilities to build something like this to create what we want to create is a global SEPA instant for corporate business. So we want to become a payment infrastructure for global business to build on stablecoins, instantaneous payments, cross-border payments. That means European corporates, maybe also at some point in time retail, but let's focus also on corporates for now, doing business outside of Europe and the outside world of Europe, doing business with Europe. That's it. Using stablecoins for that as global instant payment mechanism, that's what we're aiming for. That's our key focus.
That's a very interesting one. So the use case from your perspective is cross-border payments and not settlement really, right? I think that's it could be an add-on because I think that's when I hear a lot of the discussion coming from Galaxy more in the crypto world potentially, right? Are about stablecoins as a settlement instrument. And then we all know these stablecoins, which are more an investment vehicle, but they're labeled stablecoin for whatever regulatory or other reasons. But if I see from your perspective, you're truly going after very traditional bank-based business model, global payments, and I assume FX, right? And then maybe dive into that because I think we touched the euro part, but you have some or had some recent news around an additional stablecoin joining the AllUnity family. So maybe dive into that and maybe you can link the two a little bit.
Yeah, absolutely. It's all about global payments. So, yes, where are stablecoins used today? They're used as margin currency for crypto derivatives on predominantly Asian crypto exchanges or US crypto exchanges. Yeah, but that's not our focus. Our focus is cross-border payments. And when we mean cross-border payments, we don't mean within the European Union, France or Germany using the euro. We mean that's France to Argentina, Brazil to Germany, Poland to I don't know what. Yeah. And so within the European Union, you still have other currencies than the euro, but outside of the European Union, you naturally have other currencies. And the fundamental feedback that we receive from all interested parties is that local companies don't want to care for foreign currencies. So they want to use their local currency. So Europeans want to send euro, but it's a Japanese companies, they don't want euro. They want to have a Japanese yen. So when we talk about stablecoin payments, cross-border payments, we really mean Europe to the outside world and outside world to inside Europe. And to facilitate stablecoin payments between, example, Europe and Japan, you not only have to have a euro stablecoin, but you also have to have a Japanese yen stablecoin because the Japanese company wants to send Japanese yen. And then, as you said, Ben, you need to FX it so that the European company receives European stablecoins. And as long as there's not 100% stablecoin business, you need the on and off ramps in both currencies too. And this is also why you hinted at that. We launched a Swiss franc stablecoin because Switzerland is doing what? 80% of their business with the European Union. They have a different currency, strong currency, especially when you look at how the currency is positioned right now. So for us, launching a Swiss franc stablecoin to facilitate cross-border business, even if it's not far apart, it is a different currency and you have to have exit, you have to treat it, and you have to care for it. And when you look at cross-border payments, some transactions might be within minutes, but other transactions cost a couple of percent of the transaction volume and take a couple of days. That's risk in the system. It's counterparty risk. It's market price risk. It is currency FX risk. And with instant global payment based on stablecoins, you can kick out that risk. You can be more efficient at a different price with an automatic FX. And that's what we're aiming for.
And potentially your client is not only the large corporate, but also the mid-sized company who actually pays a lot to the bank for those global payment and probably doesn't get the same as FX rate as a DAX or another major listed company. So I assume that is a true target group.
100%. So if you really look at the top, I don't know, 10, 20 companies in each jurisdiction, do they really have a payment problem? Most likely not. They have the best banking rails, they get the best prices, they get the best access, they have the capabilities to be in various jurisdictions with various banks. Let's say the strong middle layer that most of the economical environments have globally, yeah, they have maybe one house bank. They don't get maybe the best FX rate in all countries. It is not as easy to operate several banking infrastructures for them or banking partnerships with them. They are let's say, the biggest beneficiaries of stablecoin payments because we have connected several banks. That means we can tap into several FX offerings. For them, getting the money a day earlier, 2 days earlier, getting risk out of the system is a much bigger benefit than maybe the top tier companies who anyway have the power and the bandwidth and maybe the balance sheet to stomach it. But the strong middle class, so to say, that's doing a lot of global business, that are dependent on their single rails that they have, they will be the biggest beneficiaries. And in that one, Ben, you're totally right.
So when I look, and you mentioned it before, you have a very unique investor base, right? You're backed by DWS, by Flow Traders, and by Galaxy, right? And DWS alone is one of the largest asset managers in the world and an affiliate of a GSIB bank, right? Which is very relevant. How does that help, and how does that combination help? What roles do the individuals play, and how does it help you in that client discussion? I mean, trust is probably one of the key words you just mentioned, but probably not the only topic.
No, 100%. But let's say trust is one aspect, but trust has two dimensions. What trust is one dimension is in the strength of the partner and the investor. The other one is the strength of understanding what my potential customers want. And so, as stablecoins can have multiple use cases in the future, cross-border payments, remittance payments, you said it, settlement, ultimately investment, whatever can come up in the future. You have to tap several roles and knowledge pools to build something of a knowledge with which you then confront the potential customer. One is you're ultimately managing a huge reserve pool of assets, be it cash or be it investment products, depending on the individual jurisdiction, how you treat the reserves. DWS, you mentioned it. Nobody, probably a few players, but DWS is probably one of the top players to work with us, how such an infrastructure can be set up. You need technology and you need the understanding of the more crypto native world. Yeah. And technology, I mean, we're talking here, GK8 is providing the
Yes.
infrastructure to us.
Proudly to power our Unity, surely, yes.
Absolutely. And so you need to have this degen crypto approach, but also Galaxy is a very successful investment bank in the whole ecosystem, a very strong technology provider in the whole ecosystem. So that adds a very strong trust layer to that. And Flow Traders is a market maker, is an ETP provider who's very strong also in the crypto world. So he knows, or they know how to manage liquidity pools which will become extremely relevant. Galaxy, by the way, they also are very strong in that. But it's a Galaxy with that angle and Flow Traders there, they have the knowledge and the bandwidth to operate liquidity pools, which will become extremely relevant when you have various currencies and various regulatory frameworks with cash and investment products, and you have to manage this for your client assets. Building this core banking system that is necessary to operate a global SEPA instant for the corporate worlds needs this knowledge to build something that is truly institutional grade.
So you truly tap actually into the strengths of each of your investors, not just you didn't just take their money, you also took their insights and know-how. That's basically what you were saying.
Let's say there's two angles to that one. Firstly, we are a financial institution, and that
Yes.
means we're independent. They are the shareholders, therefore we are dependent to the shareholders. But as a financial institution, there's independence and there's arm's length. But there is knowledge, and this knowledge naturally is shared with the investment. And we are creating an infrastructure and a service incorporating that knowledge. Yes, absolutely.
It sounds interesting. I mean, there's one elephant in the room we have to address, right? I mean, it is stable coins mostly these days are US dollar dominated, right? But is that actually an opportunity for you guys? Because it seems like the whole current digital, especially crypto infrastructure, is being built. It's very dollar um, dominated. Is that for you as an individual company also an opportunity? And how would you look at that from your vantage point and your discussions? Because I see you around the world at different conferences here and there, so you do also have that global perspective.
Yes. So I, I wouldn't say I'm not at all concerned, but it does not really address the the issue going forward. So the the history of why we are with a 99.5% US dollar dominance to any other currency is totally explainable because the whole market for settlement or margin currency where stablecoin original usage was done moving between financial institution or asset pools and then using it as margin currency for crypto derivatives is coming from Asia. Yeah. And that means US dollar is the native currency that everybody picked into that one. And if you truly dig into the figures of global transactions on stablecoins, then it's mostly still this. So the amount of really truly stablecoin cross-border payments in a classical sense is still very, 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 very small. The rest is still crypto world. And so there is not really a benefit for outside of the FX, yeah, for Europeans to use a euro stablecoin instead of a US dollar stablecoin when you trade on an Asian crypto exchange. But the euro is the second largest reserve currency. Depending on which trade area you are, the euro makes between 20 and 40% of the ratio of usage to the US dollar. It is it is, I think, absolutely viable to assume that with the developing Europe, let's say, digital economy, especially by the geopolitical situation and the push done by the European Union, that this will at least somehow also be preserved or translated to the digital world. So we speak about a potential uptick of, let's say, 10 to 20%. For us, that's a huge chance.
And it's an opportunity you can capture it as a company, I assume, right? So
Absolutely.
you co-write that. I mean, I have to say, I worked at the institution before, was very keen on on getting your adoption. So I mean, but for you, basically, you're saying is with the rebalancing more towards the natural state out of that pure crypto dollar dominance, even if it's not the same market share for you as a company, that's a huge chunk. And if you co-write it, that's really a growth opportunity and trajectory. As a company, we don't talk geopolitics macro, but for you as a company, that's huge, right? That's a
That's
huge
huge.
potential.
100%. When you look at, I don't know what the today's volume in what really today's last statistics in volumes of stablecoins is, but it's like 400 billion, 500 billion, I don't know. Right now, the market share is what, 0.5% for all stablecoins not US dollar denominated. So if you imagine there's a lot of, let's say, market participants and consulting firms assuming that stablecoin market will grow to 1 to 3 trillion until 2030. If you assume that 10% is a possible ratio for euro, or 20% or even beyond that for non-US dollar stablecoins, then there's a huge market potential for us as a company. Europe is a very strong economic area. There's a lot of business going into the European Union and from the European Union to the rest of the world. Parts of that business will be done with stablecoins to increase the efficiency. Ultimately, I assume two stablecoin providers will make it. You don't want to have one, but you don't also want to have 10. So maybe two will make it, maybe with a special one, maybe max three. If you can be one of the one, it's a huge economic potential and a great
That's
chance.
the bet, right?
That's the
That's the
bet,
big
man.
bet your investors made, the arm's length investors. No, but it's super interesting. Now, you touched upon it in the beginning, right? So let's zoom out in the last few minutes a bit. I think we have 2, 3 minutes to discuss. So if you look 5, 10 years from now, right? Not talking about your individual company, but where would you say the stablecoin or which role does the stablecoin play in that ecosystem? We just touched a few things like there's retail, there's wholesale, both also in a CBDC version. There are the deposit tokens we haven't touched upon yet. Bank transfers, that's a direct competitor, if I understand yours. Just traditional settlement systems, but also more digital new settlement system, just to name a few. Where in your thinking does stablecoin sit, irrespective of AllUnity plays in that specific arena, right? That's the big picture.
Absolutely. I think quickly, um, in an ideal world, we don't speak about it at all anymore because it's embedded in the infrastructure. I just want to pay, companies just want to pay. And actually, my service provider looks for the cheapest way. Is it within European Union? I might use SEPA Instant, I might use CDBCs if inside the European Union or outside of the European Union, CDBCs are accepted. But for certain areas, US and other areas, stablecoins will be the most efficient, the most flexible way, especially when we come to the next level of programmability, ID, data enhancement, approval, checks and balances, and what have you. And so stablecoins will be one fundamental piece in the global payment scheme. Uh, but in an ideal world, we don't talk about it anymore because it is just part of the payment scheme. It works, it is highly efficient, and we as consumers just want to pay. I think five years is too early for that one, but yes, that's my idea. So it will be the most flexible way and heavily used.
Thank you, Alex. And that's, I think, quite a good outlook for what we can expect in the next 10 years. But thanks a lot also for putting into perspective and letting us understand what AllUnity and maybe stablecoins in general are focusing in right now. Thank you, everyone, for tuning in. And thank you, Alex, for sharing. Hope to see many of you soon again for the next joint custody.
Thank you very much, guys.